Welcome to your monthly business news breakdown. This time, we are unpacking the autumn budget for 2025. After weeks and weeks of speculation, the official policies are finally out. So, in this explainer, we're going to get right into what they actually mean for your business and your finances. Let's do it.
But first, we have to talk about the bit of drama surrounding how this whole thing was revealed. In a really unexpected twist, the Office for Budget Responsibility, the OBR, the UK's independent economic forecaster, they accidentally published their report early. Whoops. The document was taken down super fast, but not before the media got a hold of it, which, as you can imagine, set the stage for one of the most dramatic budget reveals in a long, long time.
Okay, a bit of drama is always interesting, right? But beyond the leak, what's the actual substance of these policies? How are they really going to affect your bottom line, your investments, and your plans for the future? Well, that's exactly what we're here to break down.
So, let's dive into our first section and really look at the key policies that came out of the budget. Because at the end of the day, how the details came out matters way less than the policies themselves. It's the real-world impact of these changes that you're going to be feeling for years to come. So, let's get straight to the heart of what was actually announced.
First up, let's tackle the new tax landscape. It's what everyone really wants to know about, isn't it? This section is all about the big changes coming for property owners, for savers, and for company shareholders. We'll kick things off with how this all affects income tax.
Now this is really interesting. What they've done is create new, totally separate income tax rates just for property and savings income. This all kicks in from April 2027. And look, both are getting hit with a 2 percentage point increase right across the board. That takes the rates to 22%, 42%, and 47%.
And on top of that, owners of high-valued properties are now facing a new surcharge. Lots of people are already calling it the mansion tax. So, if your property is valued over £2 million, this is an extra charge on top of your council tax, and it could go as high as £7,500 a year.
Okay, company shareholders, this one's for you. Starting in April 2026, dividend tax rates are also going up by 2%. The basic rate is going to climb to 10.75%, and the higher rate will jump to 35.75%. And the really crucial point here is that it forces business owners to ask a tough question. Are dividends still the most tax-efficient way to take money out of the company? Or is it maybe time to look at other options, like salaries or pension contributions?
All right, that was a lot of dates. Let's just quickly recap those key deadlines so you can pop them in your calendar. April 2026, that's the dividend tax rise. 1 year later, April 2027, the new property and savings tax rates start. And then looking a bit further out, there's a cap on salary sacrificed for pensions coming in 2029.
Okay, let's pivot a little. We've talked about personal taxes. Now let's get into the direct costs of actually running a business. This next part focuses on the rising operational expenses you're probably going to face. The budget set out some pretty big changes here, and we'll start with the impact on your payroll.
You can see the upcoming changes pretty clearly on this chart. From April 2026, the national minimum wage is going up. Now, while workers who are 21 and over will see a 4.1% increase, look at the jump for younger workers. It's a rise of between 6 and 8.5%. This is all part of a government initiative to move towards a single rate for all ages. So, what can you actually do to get ready for this? Well, here's a pretty clear action plan for you. First, start reviewing your payroll right now to see who's affected. Then, update your budgets for next April. You might also need to think about whether your pricing needs to adjust. And finally, be aware of any potential knock-on effects for employees who are already earning above the minimum wage.
And here's another major operational shift that's on the horizon. From 2029, e-invoicing is going to be mandatory for all VAT invoices. Now, I know 2029 seems like it's ages away, but it means businesses really need to start thinking now about their accounting software and their whole digitization process just to make sure that transition is a smooth one.
Okay, after all that news about rising costs, let's switch gears and look for the silver linings, because it's not all tax hikes and new expenses. In this section, we're going to explore some really important tax planning opportunities and reliefs that the budget brought up, and these are things that shrewd business owners should definitely know about.
A huge change is coming to inheritance tax relief for business and agricultural property. So right now, these assets get 100% relief. But from April 2026, that 100% relief is going to be capped at the first £1 million of value. Anything over that will only qualify for 50% relief. This is a massive change for estate planning.
But there is a silver lining. The budget also confirmed that any unused allowance can be transferred to a surviving spouse or civil partner. What that means is a couple could potentially pass on up to £3 million of qualifying assets completely free of inheritance tax.
There are also some updates to capital allowances. That's the system that lets you deduct the value of an asset over time. So while the annual writing down allowance is dropping a little bit, it's being offset by a new 40% first-year allowance. And if you're investing in green tech, the 100% first-year relief for new electric vehicles and charging points has now been extended to April 2027.
For our last section, let's end on a really proactive note. We're going to cover how you can protect your business assets, both your money and your data. The budget included 2 key updates in this area that are, frankly, more important than ever to understand. And here is some genuinely excellent news for your peace of mind. The deposit protection limit from the Financial Services Compensation Scheme, the FSCS, has been increased. It's now up to £120,000. That's a pretty significant jump from the old $85,000, and it offers much better protection for your business's cash.
So, the crucial thing to remember is how this actually works. The limit is applied per depositor per institution. This means if your business has more cash than the limit, you can actually get even more protection just by spreading your funds across different authorized banks. It's a simple move, but a really effective one. And finally, for protecting your digital assets, the National Cybersecurity Center has launched a new and completely free Cyber Action Toolkit. It's specifically designed for small businesses that don't have huge IT budgets. And you can see from this user's comment just how practical it is. It gives you simple steps you can take right away.
So, after taking in all these changes, from new taxes and rising costs to new reliefs and protections, we're left with this one last question. With all this new information, have you actually re-examined your plans for the coming year to make sure you're as resilient and as tax efficient as possible? Because now is the perfect time to do it.